I have the great pleasure in introducing Eddie Tothpick to you. He's a fellow Essex boy, so that's always good. I think, and you're a city veteran, would you call it that?
Oh, yeah.
City veteran, right, okay, yes. And has been at ADM ISI, where he is now, since 1991. So that's, they've got some staying power, haven't they? Doing various roles, running the Forex desk for a long time there, but now a dedicated technical analyst, which I think is starting to become a bit of a rare breed in the world these days, somebody who's actually a full-time TA. And I think the interesting thing for me about what Eddie does and where Eddie is that ADM is a commodities and a grains company, and it's an interesting side of things. You know, I'm increasingly interested in the idea of applying technical analysis to things that actually really matter. I don't know whether I'm being a little bit controversial there or whatever. And yeah, so I first met Eddie at IFTA in 2014, and one of the things that I know he specialises in is the pitchfork analysis, and sort of that's what we're very happy to hear you talk about today. So without further ado, I shall pass you on to pass you over to Eddie. Thanks very much.
Thank you very much. Good afternoon, good evening actually. My name's Eddie Tothpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International. As a brief rundown about ADM, everyone here would have eaten something today that's been processed by my company, whether it be flour for bread or for cooking, or we are one of the biggest, what I call the ABCD companies. We're one of the biggest processors of food, from raw materials to semi-finished products. And as a result of that, we're heavily involved in the agricultural markets, and we have a brokerage operation in London, which is a 24-hour operation, and this allows us to cover a multitude of markets, because as we've grown, so have the markets we've covered. Initially, obviously the agriculturals, but it's gone into things such as metals, electricity, stocks, fixed income, and we've used all of that, the technical analysis on that. That's where I sit. Come and visit me anytime. Really close to that window, so wave if you like, but my finance director will probably wave back at you. The title of this thing is Avoiding the Spikes. I actually originally wanted, is Katie around here at all? No, originally I wanted to call it Avoiding the Pricks, but basically I was told you shouldn't say that, so I can say that, but I shouldn't have it in the title. But it's exactly how it is. There is a lot of abuses. I cannot tell you how many times people have abused it. I like Andrews and Schiff Pitchforks, and I'll explain my enthusiasm for them as I go through them. So thank you for this opportunity. First off, an acknowledgement. We have an excellent article in this month's, on the March edition, sorry, of the Market Technician, which covers it's a two-part article. The very first part of it is brilliant. It covers some of the history about it, some of which I'll cover myself as well. You know, the more you know about it, the more you realise just how applicable it can be in our markets, and it's across all markets. So, a listing of the principal protagonists. Dr. Alan Hall Andrews, hence the Andrews Pitchfork. Jerome Schiff. I don't have a picture of Jerome Schiff, so I've put the actor Richard Schiff, who I actually really like, from The West Wing and most recently The Good Doctor, which I highly recommend, because I think he really looks the part, and so he's up there. Roger Ward Babson, who is connected with Dr. Andrews, which I'll explain in a little while. His older sister, and it's really important that this part is actually in it. I don't have a picture of her either, but there you go. And some 17th century mathematician, which comes into this story as well. This one actually is Fermat, because of his last theorem. I actually quite like it. It was quite popular. But it might have been some other geezer. I'm not quite sure. It might have been Newton, possibly. And these are their roles. Many, many years ago, in the 1600s, they started doing some mathematical work which allowed for the idea of the median line principle, which is where we originate all the work we've done on Andrews and Schiff. some believe Roger Ward Babson, who was involved in commodities and various other things, I can't remember the guy he worked for, but he had a great interest in it, and it was actually driven even more so when he saw his older sister nearly drown and come up in sort of water, that it suddenly struck him the idea of gravity. And he wanted to use the principles of Newtonian physics, hence Newton, into maybe how markets operate. Obviously, I don't personally think they work that way, because that's a closed system, and where the markets are much more complex and more fractal than that. Now, Alan Andrews worked for Roger Ward Babson, and they worked together. And when Roger sort of stepped out of the picture effectively, Alan Andrews carried on that work and developed the Andrews Pitchfork. Now, where does Jerome Schiff come into this, and why is he important? The median line method is a good way of doing it, and I'll explain about that, but there's no time element in it. Now, I don't know this, but I know somebody who knew somebody who was there. You know, it sounds like some sort of weird sort of story, this, but who was there when Jerome Schiff asked Alan Andrews, how can I put a time element in this? Would I be able to do that? Would you mind? And Dr. Alan Andrews said, yeah, sure, go ahead. And he and Jerome Schiff came up with the original Schiff Pitchfork, which we've then developed into the modified Schiff. Now, how did I start knowing and using Andrews and Schiff Pitchforks? Right. You've all seen this probably, or the modern version of it. It's technical analysis of the futures markets. This is the original one of the original ones I've got. I've got about 5 of them. And as Clive said, yes, I have a signed copy of this, the original one, with the fly cover. It's wrapped in cellophane, wrapped in foil, wrapped in cellophane again, and nobody's getting anywhere near it. This one is the one I started using, one of the ones I started using, because I had one at home and one at work, back in 1986, I think it was, because I know it is, because there's the first elements I ever saw of the Andrews Pitchfork. And I started using it from that moment and realizing how beautiful it was, how elegant. And I know it's from that period because that is an original Dean Witter Reynolds ticket from 1987, which was originally pink-ish, but it's used as a page marker. So that's where I started learning about it. I highly recommend those who haven't, if you haven't, obviously, some of you might be visiting for us for the first time. It's called Technical Analysis of the Financial Markets. Now, please get a copy. It tells you everything. You start with that, you then know where to go. That's how I got involved in technical analysis, and that's how I started with Andrews and Schiff Pitchforks. So how do we use an Andrews Pitchfork? Now let's look at some charts. This is the S&P futures from 2 years ago. It's continuous futures markets. It's front month continuous. I'm sorry for those of you who don't use futures markets, but this is a good example of how I wanted to use it. There are others I could have used, but this is a really good example. For a bullish Andrews Pitchfork, you take a significant, I'm sorry if I'm repeating for those who already know, you take the significant low in the market. In this particular case, I took the most forward one of this, which is point A. Then, and I've optimized this a little bit, and you'll see why. I take the next significant high, which was point B just before this drop, which is the next significant low, C. Make sure C is never lower or below point A. I have seen that. I wanted to include some of the abuses, and then I realized I'd be breaking so many copyrights by showing people's rubbish work that I've chosen not to. But there are so many people who start drawing pitchforks from here and using those points. The things about Schiff and Andrews is they fit or they don't. They are useful or you can't use them, and you can use something else and use your expertise in that area. But do not make sure, if it's on a bullish one, the point C is never lower than point A. Bisect the line between them, which is point X, and draw a line straight through it and go into the future with it. Then draw a parallel to point AX, and from point B, and another one from point C. This was just using PowerPoint drawing techniques, so it's very rough and ready. That's your basic Andrews, bullish Andrews pitchfork. And this is what it looks like in real life. That's the one I used until recently, and I'll show you why I used it recently, and why it's important is because of this. That's captured 2 years' worth of action in the S&P futures market. And not only that, it's an excellent example of the angle of attack. I'm going to move over to the thing to show on this one. I'll go over to some of those ones occasionally as well. It moved along here, along the middle tine. So you've got the upper, the middle, and the lower tine. It moved along the lower tine and was an excellent angle of attack. Usually what you'll see is, for example, it go up to here and come back to the lower tine and follow the lower one and go backwards and forwards. But it moved along there and it was an excellent support, then became resistance, then it dropped down to here where we saw further support, then it became resistance, and I mean that's the actual bloody peak. I don't see how you can actually get any better than that. And not only that, there's more when I'll show you in a second. It's all dynamic. Support changes every day. Resistance changes every day. It is real in the sense of it keeps moving. You cannot keep it as a fixed number. Even when it broke, even when we had the breakdown through these points here, it still came up to it and followed it, and then followed it on the downside here. It went up to the middle time, back to the lower time, up to the middle time, back to the lower time. There's an elegance and a beauty about it. Now we'll take a closer look at the rectangle above. Excuse me whilst I drink. This is the action on the S&P futures contract until the weekend, last weekend. Now sometimes Andrews pitchforks don't seem to work. They either fit or they don't fit. And if they don't work, that's fine, use something else. Not very good fit. There's nothing, you can only have drawn this from this point here. Yeah, you've got a great resistance line all the way down to here, but now it's starting to break away. But in that time, it's managed to follow along that upper tine of the bearish Andrews pitchfork and followed along quite well. And this is, we've seen some pretty, Trump-like markets in this as well, so bear that in mind. It's maybe too early, but in this case, maybe you want to use something such as a modified Schiff pitchfork. But the very first thing is use this. This is a standard bearish Schiff pitchfork. What did Jerome Schiff put in that was different from what Alan Andrews had used and would use up to that point? It's constructed from an imaginary point. It's not drawn from a specific high or low, but from a point in space and time, which is actually halfway between the high and the low, vertically, on any chart. And it bisects them from point X, and you cut down from there and do parallels to there. That's the element he wanted to put in. He wanted to put in the time element for it and his construction of pitchforks. Now, I personally don't use them, and there's two reasons. One, my charting software doesn't do it. I'd have to physically actually work it out and put something in the middle of space. And the other one, I prefer the modified Schiff pitchfork because I think it actually is more of the time element in there, because the modified Schiff pitchfork is that. Yes, it's a space, it's a point X is in the middle of space, but it's in the space between the high and the low, drawn along with a time element into it. Now, taking that into account, I still call it a Schiff pitchfork, which is my bad. I'm really sorry about it. It's a modified Schiff pitchfork, MSP, but I still call it an SP. So, and there's shorthand. It will be AP for Andrews and SP for Schiff pitchforks. There is limited impact from there, but you can see as we follow the middle tine that it may be possibly trying to get the angle of attack of that last piece of work, but there's actually something more important in there. That's just explaining how it's actually constructed. And you actually find the geometry of it is actually, it's a channel line. It's a bearish channel line, but you can see where the points are drawn from. And it's not always where you think it is. It can be from significant lows and highs, but it's not always the last high and would follow a natural trend line. And it's obviously vice versa for a bullish one. This is something to watch out for, and this is something I've observed. It's not operational every time. It works great in sugar. It has worked great in the S&P in the past. It's worked okay. It worked brilliantly in cable, in sterling against the US dollar. And that's crossover points. Crossovers are periods where you see one pitchfork tine cross over another, especially if the market is within them. Sometimes you'll have a crossover point such as this one here, which is outside the market, but it does impact it. What you tend to see is there'll be either one, heavy volatility, two, a change of trend, or three, both. That's actually, I've seen that actually happen. It doesn't happen every time, but it's something to give you a period of time and say, okay, this is actually going to be tomorrow, from what I can tell from when I've drawn it. It's going to be tomorrow, or late tonight tomorrow. It crosses over those 2 days on that bar chart. The one here was just a turnaround. The market turned up from there, but it didn't last too long. So you do see that, for example, this move up, I think that was maybe an indicator something was going on. Now, it doesn't happen all the time, but I'd say anything that happens more than 2/3 out of 3 times, 2 out of 3 times, is something to be watched. And maybe somebody here who has the time and energy, and I don't, I'm afraid, could do some more analysis on it. I know Bulkowski does a lot of analysis, but I haven't had the time to speak to him about this one. But I do like this one very, very much. I pause now for questions. I pause now for any questions.
Do you always overlay the SP over the top of the Andrews Pitchfork, for example? No. Okay.
I put it on to see if it fits. It's go back to that earlier rule. If it fits, great. If it doesn't, I discard it. The AP is more often seen in predicting trend, whereas the SP is actually good at shorter market movements, because obviously it's similar to a channel line. But the crossovers are what I look for as well. I didn't put anything on there because there's no point in putting on there. It would be, it's busted. If I drew an SP on there, it would be going middle tine through there, upper tine through there, and the lower tine's somewhere down there. It wouldn't necessarily work. It wouldn't show, there would be nothing. It's the difference between being an art and a science. It shows, you can recognize it. We're all pretty grizzled, no offense, we're not all grizzled, but some of us are pretty grizzled. We all know what we're looking at. And if we can't see it, then it's probably not there.
How do you interpret the crossovers, for example, if you did overlay another fork over that one?
Well, I would literally look for specifically the middle tines crossing over either the upper or lower, or vice versa. It would be specifically this tine here. That would be the central one to look for, because that's giving you the angle of attack of the market. What crosses over? Would in this particular instance, the Schiff Pitchfork would be something like that. So it would be where the lower tine crosses over here, and where the center tine of the Schiff Pitchfork will cross over here. But I don't think that's necessarily valid there, because I don't think it's a good example of it. But it gives you an example of what it is.
Thank you.
Question here.
Thanks, Eddie. I've just got a bit of a question about the time horizons on this specific chart.
Yep.
So let's say, for example, the 2 points of where your B and C are at the moment.
Yeah.
If that we weren't at that stage in time at the moment, and you just had the high, and there's a low point in January 18,
Yeah.
and then just at early February there's a high point, would you have drawn that previously and then?
Yes.
You did, yeah?
I would have, and I would have discarded it because it wasn't valid. It would have been broken.
Okay, so then when do you discard it and move on to a next one? And what
When
does
it does,
tell you
when
at
it
that
doesn't
point?
fit, when you go outside it, 2 closes outside of it.
2 closes outside.
You know, it's the standard thing, 2 consecutive closes as a minimum. Sometimes, I mean, the S&P one I left because it was such a long time period, two and a bit years. So therefore, I thought it was valid that you should keep that on there because there's something behind this. And until I find out what it is, I'm going to carry on looking at that as being potential, just in the background there. But it's usually 2 closes.
Yeah. So then in terms of actionable trade ideas off of this, let's say, for example, we don't know what's happened further on into the future, because I think it might be near 7,000 now or something like that.
Yeah.
But if, I mean, how would you use it? Would you trade a break off the outside?
Here we go. I'm not right. I've got people from my company here. Shut up. I'm not allowed to give you advice. I am only allowed to give you market commentary and colour. Can you stop for a second? No, don't. If I was somebody else, and it was my interest to use this as a device for timing and also market entry and exit, I would suggest, having had this amount of information here, sell orders, buy orders, sell orders, buy orders. With sell stops underneath there, doubling up. Buy stops getting out of it the other way round. Sell orders up there. Buy orders there. Sell stops. Doubling up sell stops. Buybacks, you still would have made money on that one. A buy, especially now I've got the long moving average, I'd probably exit the market at that point. And then probably a buy stop above that, because you're now going outside of the realm of the Andrews Pitchfork. So therefore it's going further than what this has generated as an idea of action. So you move backwards and forwards within it. Clive? Oh, sorry, Nicola. Nicole.
Just on this one, first of all, what exactly is the time of your long moving average?
Right, this is the bit which everybody looks at me a bit weirdly. I have never used the 200. I was very inspired when I first joined the society, and I still don't understand any of it, by some of the works of Gann. So all my short moving average is 1 month. Short medium is 3 months. Medium is 6. Long is 1 year. But I don't use the standard numbers. I use the nearest one that's divided by 9. So I would use, in this particular instance, 198. 99 for 6 months, 54 for the 3 months, and 18 for the 1 month. I like that because I think that there is so much in Gann's work, and at my age I'm never going to find it out because there's too much to learn. But I do believe that the number 9 is supremely important in all trading. And so hence I've used that in my moving averages. And I will continue to do so, and I may be wrong, but I don't think so because it's still doing this job. So there you go.
The other thing I wanted to ask is if we could go back to your heating oil contract.
Yep.
I want to see if I can understand where exactly you start the shift line.
Yep,
Why
the modified.
Did you pick that point?
Because here is point A, here is point B. The standard shift would be bisecting this line of the two values, there to there, but in a vertical sense. The modified shift moves it in time and bisects this line. And that point is drawn from there. And all the other parallels in that respect as well.
Thank you.
Clive, you had something?
Trading strategy that isn't yours, obviously. But
No, I can only give market colour and commentary. I am not allowed to give advice under the regulated Financial Conduct Authority.
Yeah, I know. It sort of echoes a bit of a Bollinger Band strategy. You know, set at the
Yes.
top band, set
Yeah.
at the bottom band, have a stop
Yeah.
strategy somewhere around the middle band. And obviously another thing with Bollinger Bands, trading Bollinger Bands, is buying the breakout. Do you, in your experience, see when dynamic moves when the top or bottom tines break?
Not always, because sometimes the market's got, as you know, there's 3 states of the market: going up, going down, and going sideways. And the amount of times I've seen these things break because the market's gone into neutral. It's literally trading in a trading range. In which case you then apply a different methodology of whatever you want on that. I know somebody who followed Bolly bands back in the 80s, early 90s, and they found it very hard because you can't just be an automaton. You know as well as I do. You've got to apply your own knowledge and this as an art rather than as a science. It just doesn't work that way. I do agree with the idea of that, that there are elements to it, but it's a lot of things such as that as well. Anything that trades within a trading band, whether it be that or other ones, then it'd be exactly the same sort of thing. Yes, sir. Oh, I haven't told you what a crossover. That one crosses over at the September, late August 2018 is the first one, I think. So heating oil, something happens in late August 2018. Sorry.
With the S&P example that you gave,
Yeah.
with such a large data set like that over 2 years, would you use a logarithmic chart?
No. I just try and squash the damn thing as much as possible. I'm trying to get back to it. Hang on. No, I didn't use a logarithmic. I haven't got I can probably figure it out on my computer, but I'm used to paper charts. So I still drew, in my mind, I still think on paper charts. And I still do the old thing occasionally. I'll print one of these when I don't understand what's going on, and I'll hold it up to the light the other way around. And yeah, you see what I'm saying? It's a way that if you're, most brokers are naturally bearish because we've seen where the market's extended to and we think where it's going to come back to. Investors tend to be naturally bullish. They think it's going to go further on, and they can be equally right in some cases. So I don't do that. I use the charts I always do. The great ability now is to be able to squash all that data down. I would probably use a weekly or a monthly chart in this particular instance because it's just noise, but it's a better way of showing that noise, because I could have just drawn a chart and picked it out from random, but I wanted you to see individual days how it followed those lines, specifically the support here, the resistance here, how it came close to here, and specifically this action here, which I mean, that I wasn't surprised there, but it still freaks you out when it happens. When you have sort of like the pullback up from a pipe bottom up to there and then down to here, and then you're going, what the hell's going on now? Stop looking at my charts, basically. Use your own.
At the right-hand side of your chart, you are looking at the prices sort of up to last weekend.
Yes.
I think on Friday, it seemed to fall quite close to the 200-day moving average and then bounce away from it.
I've taken those off because I wanted to show that. In copper, it was easier to show that. I agree with you. All that. This is the long moving average. 108 or 200 is still the long moving average. I wanted to concentrate on this, with the exception of copper, to show how it doesn't work all the time and what can derail it. What can, you know, if it was working all the time, I wouldn't be talking to you. I'd be busy doing it. But it's along the lines of it can be derailed, and what's the thing that can derail it? And usually it's something that's also of an equal length and power. In this particular instance, you're talking about 2.5 years worth of activity, which has been within within 3 lines. What can really knock it out? Well, it's not going to be something that's happened last week. You know, that all happened within a week and back up again and all that 2 weeks period or whatever. That's not going to do it. It's going to be something else that's going to knock it out, and that was the long moving average.
So, Eddie, if you were a pessimistic broker rather than an optimistic investor, you might say that this very tight concertinary pattern is congestion as the market is contemplating falling through the 200-day moving average. It hasn't done it yet, but it is contemplating it very strongly.
I would have used the modified Schiff and said, maybe that's the angle of attack that we're going to go down, because that seems too steep. That seems too steep. We would be asking for trouble. I mean, you could argue the case that this is a halfway hesitation, which is one I have argued, that this is halfway hesitation and we're looking down to about here. But I would say, potentially, I'd look more along this line. You're asking a lot from the market. I mean, you know, people get tired and you know, there's only so much fatigue people can take before it's sort of like, ooh, I've had enough, and that's what you'll have. But that's where I would look initially, along there.
And so something like 2 Friday night closes below the 200-day moving average. And
It's something else, but yes, I would look at that as well.
you
But I would actually look even, in this sort of market, I look at maybe 2 days, 2 consecutive days. Because the 200-day is already proved, those have proved that 200-day, or in my case, the 198, works really, really well. It's something else you should have.
Thank you.
Any other questions?
So we hear a lot about algos trading
Yeah.
futures,
Yeah.
including financials.
Yeah.
The percentage is growing quite
Yeah.
rapidly. In your opinion, maybe more like out of market gossip, do you think they use this? Because if they are the market nowadays, whatever they use is the important thing. So in your opinion, which one is the important thing that is important today? I mean, what are they putting into those computers to make them trade?
I don't know what they put in the computers. But I read something recently which reminded me a lot about what I think about algos. And it was an American politician who said, the masses are not always right because sometimes the M is silent. Okay, work on that one. I'm here all week. But that is what I believe. Just because they're all eventually going to be using probably the same data sets, same methodology perhaps, so they'll come up with the same conclusions. They may use this, but it requires more than just mathematical expertise to be able, or knowledge to be able to come with this. You need to, like I say, they could easily turn around and say, oh, Andrews Pitchfork, look, it's that. No, it's not, because it doesn't fit. Get rid of it. Don't follow it. Doesn't work. Or as in the previous example, which I showed on copper, I think it was, you have a situation where you could draw one through here. And I've seen stuff like that. And I despair sometimes at what people will print. That there are people using this stuff and they're just drawing lines on it because they've got the ability to do so. That's fine, but get a little knowledge and don't publish it as being the truth. And some of them I think have actually been pulled up on it. There was one French blog spot which I think had a Canadian guy on it who specifically did this sort of stuff. So I'm being generalist there. I can't actually mention anybody's name because I can't actually remember the guy's name. There was another one from somewhere else which I remember seeing. I was just looking going, what the hell is this? You know, the society, which we're all hopefully part of, is the ultimate source of knowledge in this respect. And we should always go by what the peer group here is, rather than what's out there. I hope that's answered your question. Yep. Any other questions? I've got 2 over here. I'm getting good at this now. 2 here.
Yes, when
Yes.
you've maybe abandoned one of the charts, do you ever allow for it to come back?
I've done that a couple of times when I thought it was broken and was
Yes.
no longer valid, and suddenly realised, holy crap, it's come back again. And what's usually happened, it's, say for example, broken, in this case, up significantly, say, as we were saying, about 7,000 and something? It's up there. Okay, this is no longer valid, I'll take it off. Then suddenly it will come down and I recognise what that pattern is. Because I would have drawn, and it's like an echo, a ghost if you like, of what's there. And yes, it does still work sometimes. I don't see it that often, but I have seen it.
Okay, thanks.
So?
Hi, good evening. If you're obviously analysing your world of, let's say it's oil,
Would you have, for example, a technical view on your pitchfork analysis on one set of charts? But over here, also paying attention to the classical formations that are appearing and some of the different types of trends that are non-pitchfork orientated. I haven't got the time. I would have done. I write a chart book on oil. I do crude oil, NYMEX front month, Brent front month, heat, RBOB, and gas oil. In all of those, I have got a limited amount of time I need to put it in, and so I tend to sort of try and get it to the most relevant things. It may be that the most relevant thing at hand is a pitchfork, but it may be it's the moving average, or it may be it's a candlestick pattern, or maybe it's something else. So I don't put the candlesticks separately. I haven't got enough time to do that. Today, I did something like, before 8 o'clock in the morning, I had to do a quick SoundCloud, which you're all welcome to listen to, which I publish, analysis of the last day's action on a cross range of markets, which include WTI. Then every day I usually do an energy one as well, but again it's a little bit more in-depth with a chart book. But I've got then to do today, I did the metals. Tomorrow it's going to be, what's tomorrow? Tomorrow is Wednesday. Cocoa and cotton, plus the sound cloud and the energy. Then on Thursday it's going to be the grains, and on Friday it's going to be the oilseeds, plus potatoes. So in an ideal world, if you had just one product, you would run two works. Yeah, because I'd want to show the different, I want to show my process of thinking. And one of the things I'd say about this is it's a longer term, it's looking at a chart from a longer term point of view. Candlesticks I think are brilliant for very short term activity. Bullish engulfing patterns, doji stars and all that sort of thing. They're there. Pattern analysis, I love it as well. This is slightly longer, and I would probably go back and look at it and try and figure out how this works in that particular instance. But it's more of a longer term point of view. How does that short term move up affect this?
Thanks very much.
That's all right. Any other questions? Right, my time is up. I'm going to run you through the final bits. I'm mindful, as I say, that time is short, so here is the final bit. Well, actually, it's not the final bit. The really final bit is this. My details are there. I do a thing called Eddie's Crayons. This comes from a long conversation. You'd love to know where it came from. It came from an argument about technical analysis, which is a daily, weekly, monthly FX futures and commodities technical analysis reviews, and it covers all sorts of markets. There he is. Comes up every so often. CME Group, I do the foreign exchange commentary for them. I'm also on Core Finance, which you can find on YouTube. A live analysis room from FX Street. I've been on that a few times. I got nominated, which is nice. And that was on the FX Street, FX Sweep. I also am a visiting lecturer on occasion at the University of Essex. I teach the foreign exchange element to the master's program, and I got recently nominated for that as well. Thank you very much.